Hey folks, I hope you're doing fine. I'm Simo from Investment Research, and today is November 13th, 2025, and I need to address the elephant in the room. Tesla stock just got hammered, down nearly 7.5% yesterday, closing at $398.17, and in pre-market today, it's trading around $424.50. So the big question everyone's asking me is, why is Tesla dropping so hard, and what should you do about it? From my research, there are three critical questions we need to answer today. First, why did Tesla drop 7%? Second, is the stock overvalued or undervalued at these levels? And third, is this a trading opportunity or a long-term hold? Let me walk you through my complete analysis. Alright, so let me start with what actually triggered this sell-off, because from my research, this isn't random market noise. On November 13th, Tesla reported that China's sales have slumped to their lowest level in 3 years. You know, China is Tesla's second largest market, and from what I've been studying, sales fell 15% year over year despite aggressive price cuts. Moreover, according to the data, Tesla's been cutting prices to maintain volumes, which helps deliveries but absolutely crushes automotive margins. From my analysis of Q3 results that came out October 22nd, the numbers were disappointing. Revenue hit $28.1 billion, up just 12% year over year, but non-GAAP earnings came in at $0.50 per share, missing analyst estimates. Operating income dropped 40% year over year to $1.6 billion versus Wall Street expectations of $1.8 billion. You know, when I see operating income down 40% while revenue is up 12%, that tells me margins are getting destroyed. What really caught my attention from my research is the global sales picture. In Europe, sales plummeted 45% year over year in January 2025. In the United States, Tesla's market share in battery electric vehicles dropped from 59% to 45%, with a 13% decline in sales. From what I've been calculating, these aren't just soft numbers, these are warning signs that demand is weakening across all major markets. Now let me address the valuation question directly, because this is where things get really interesting. From my analysis, Tesla currently trades at a PE ratio between 176 to 290, depending on which earnings metric you use. Let me put that in perspective for you. The S&P 500 average PE is around 20 to 22. Tesla is trading at 8 to 14 times the market average. You know, from my view, that's not a valuation, that's a prayer. According to what I've been studying, Tesla's market cap is approximately $1.4 trillion. To justify that valuation, the company would need to deliver absolutely massive growth in robotaxis, humanoid robots, and full self-driving adoption. From my research, CEO Elon Musk spent the entire Q3 earnings call talking about everything except current car sales, focusing on energy storage, robotics, and autonomous vehicles. Here's my honest assessment after crunching all the numbers. Tesla is dramatically overvalued as a car company. From what I've calculated, automotive revenue declined 8% with lower average selling prices across all models. Vehicle deliveries totaled just under 1.8 million in 2024, slightly below the year before. This was the first time ever that deliveries fell on an annual basis. You know, when the core business is shrinking and margins are compressing, a 176 PE ratio makes no sense whatsoever. However, Tesla bulls will argue that you're not buying a car company, you're buying an AI and robotics company. From my research, if robotaxis work at scale and Optimus humanoid robots become real products, generating hundreds of thousands of units by 2027 as management claims, then the current valuation could look cheap in hindsight. But according to my assessment, that's a massive if with enormous execution risk. Now let me talk about trading Tesla, because from what I've been watching, this stock offers incredible intraday volatility for active traders. Tesla has a beta of 1.61, meaning it moves 61% more than the broader market. Average daily volume is around 58.5 million shares with a 52-week range from $214 to $489. You know, that kind of price action creates opportunities if you know what you're doing. From my technical analysis, Tesla closed at $430.60 on November 12th, down 2.05%, and in pre-market November 13th, it's at $424.50, down another 1.42%. The intraday range today is $408.56 to $424.50. According to my charts, key support sits at $430, and we just broke through that level. The next major support is around $400 to $410. Resistance on any bounce would be $445 and then $470. For day traders, here's my strategy based on my research. Wait for Tesla to test the 400 to 410 support zone. If it holds with strong volume, that's your entry for a bounce trade targeting $430 to $435. Use a tight stop loss at $395. The risk reward is about 1 to 2, which is acceptable. However, if $400 breaks, we could see a flush down to $380 or even $350. With Tesla's volatility, these moves can happen in days, not weeks. For swing traders looking at a 1 to 2 week time frame, from my view, I'd wait for a capitulation sell-off below $400 before buying. Tesla tends to bounce hard after sharp sell-offs, but trying to catch the falling knife right now is dangerous. Moreover, according to my technical work, volume has been declining on the recent down moves, which suggests selling pressure might be exhausting, but we need confirmation. Now let me address the most important question. Is Tesla a long-term investment, or should you stay away? From my analysis, this depends entirely on what you believe about the company's future. If you believe Elon Musk will deliver on full self-driving robotaxis and Optimus robots at scale, then Tesla at $425 could be a generational buying opportunity. According to Bulls, 2026 is make or break year for these initiatives. However, from my research into the current business fundamentals, I see a traditional car company struggling with competition, declining margins, and falling market share. Tesla's automotive gross margins are trending lower as they cut prices to compete. Competition from BYD in China, legacy automakers in Europe, and new entrants globally is intensifying. The days of Tesla being the only game in town for premium EVs are over. Here's my honest take. Tesla is a speculation, not an investment. From what I've calculated, the current stock price requires perfection in execution on multiple unproven technologies over the next 3 to 5 years. According to my risk assessment, that's not a bet I'd make with core portfolio capital. If you're going to own Tesla, size it at 2 to 5% of your portfolio maximum, treat it as a speculative growth position, and be prepared for 30 to 50% drawdowns. For long-term investors seeking stable returns, from my view, Tesla doesn't fit the profile. The business is too dependent on Musk's vision coming true, the valuation is too rich relative to current fundamentals, and the competitive dynamics are deteriorating. Moreover, according to what I've been studying, Musk's attention is divided across multiple companies and initiatives, which creates execution risk. So here's my call after analyzing all the data. Tesla is a sell for conservative investors and a hold for existing shareholders who got in below $300. For traders, there's opportunity in the volatility, but you need tight risk management. My 12-month price target based on fundamentals is $280 to $320, representing significant downside from current levels. The bull case requires believing in robotaxis, FSD, and Optimus becoming massive businesses. According to some analysts, if those work, Tesla could be worth $600 plus per share. The bear case, which I lean toward based on current evidence, suggests Tesla trades back toward traditional auto company multiples around 15 to 20 times earnings, which implies $250 to $300 per share. For those asking about long-term holding, from my assessment, only hold Tesla if you have very high risk tolerance and truly believe in the AI and robotics vision. Otherwise, There are far better long-term investments with less execution risk and more reasonable valuations. Alright folks, that's my analysis on Tesla as of November 13th, 2025. The stock dropped 7% because China sales are collapsing and margins are compressing. The valuation is extremely rich relative to current fundamentals. Trading opportunities exist but require discipline, and for long-term holding, it's too speculative for most investors. As always, do your own research and invest based on your personal risk tolerance. Thanks for watching, and I'll see you in the next analysis.